Hello traders, my name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report where we will scan the market looking for the best trading occasions on the cryptos, currencies, on indexes, commodities, everywhere where it is possible. Today we do have quite busy calendar. Also, we do have an OPEC meeting. Well, OPEC meeting was yesterday, but today we do have meeting between Saudi Arabia and Russia, which will be important in terms of the oil cut, possible cut in production. We will see how the situation will develop. Yesterday we had a drop on oil. Which was in line with the technical analysis. We were expecting that. You can check it yourself on the previous recording. But today we'll see how how the situation will develop. First, we need to check the calendar, because calendar is pretty packed today. We will have now 1 hour GDP from Eurozone and non-farm payrolls in 4.5 hours, which should sort out the situation for the next few hours. If you want more, there is the data from the job market from Canada, and we will finish the day with a speech from the FOMC member, which should not be very eventful. But this amount of data that we have here should be enough even for like 3 days of attractions. On Saturday, data from China, on Sunday as well, so maybe we can get a big gap on Monday on, for example, Australian dollar, which is correlated with the situation in China. As it is Friday, so we need to know what is going to happen next week. Now let's check the calendar. Monday important for the pound, Tuesday important for the pound, because we have vote on the Brexit plan, so this will be crucial for the pound. Obviously the results will be shown a bit later, but yes, well, not later, we'll know them straight away. On Wednesday we do have CPIs from United States, so important for the USD. And on Thursday, important day for the Swiss franc, so press conference, policy assessment, rate decision from Eurozone. No changes are expected, but obviously we will have to look at the statement and the press conference. And on Friday will be quiet. Okay, with that being said, let's move to the charts, because on the charts, what do we have? We can start with the Australian dollar to the American dollar. So what is happening here on this instrument is that the price is trying to break the neckline of the triple top formation. So 1, 2, 3, and it looks like this will be that the sellers will succeed, and this can be considered as a breakout. This is a pullback. Maybe like we can put this line like this, or even like this. So now we need to consider those lows. So it looks like a breakout. First of all, this looks like a breakout, and this does not look like a comeback. This looks like a correction, and we should see another leg down, in my opinion. So this false breakout above the neckline is still on the table. False breakout in combination with triple top formation should give us a further downswing. We need to, as it is Friday, so we are fighting for the weekly candle, and weekly candle leaves no hopes. Why is that? Because that's what? Bearish engulfing. And how bearish engulfing what they can bring us? Well, first of all, look at here. This is the first bearish engulfing. drop, bearish engulfing, drop. So far on this chart, we had two bearish engulfings on weekly chart, and both of them gave a drop. Here we have a bullish engulfing, for example, and it created an upswing. Alright, so you can see that this pattern is quite reliable in terms of the Australian dollar to American dollar. So price closing somewhere here on a weekly chart will be a significant signal to go short on this instrument. A British pound to American dollar, boring sideways trend, volatile sideways trend. We mentioned that yesterday. So we have an upswing which is cancelled, upswing cancelled, upswing cancelled, upswing cancelled, upswing cancelled, upswing cancelled again. So as you can see, the buyers try to go higher, the sellers try to go lower, everybody's pulling in the own direction, and unfortunately that creates a situation for the trend followers like myself that I stay away from this instrument. We do have a short-term dynamic support, fair enough, it's there. Long-term dynamic resistance. Breakout of this line will mean absolutely nothing. Breakout of this line will mean absolutely nothing, because we have a horizontal resistance and a horizontal support beneath. That is the reality of the British pound. We also have this, depends which one, which lower highs will you connect. Euro to British pound, inverse head and shoulder pattern, left shoulder head and right shoulder, breakout of the neckline, breakout of the horizontal resistance will happen or will not. So there is no breakout, but that is what the buyers are hoping for. They have a small success of breaking from this short-term pennant, but again it does not mean anything, because we do have this horizontal resistance here, which was important in December, at the end of December, and in the middle of November. It is important again in December, so October, November, December. So as long as we stay below the green area, we cannot think about the buy signal here. New Zealand dollar to the American dollar. This is one of the strongest pairs, which is resisting the recent correction. We do have a correction, but it's relatively flat. Well, it may look strong, but when you compare it to the others, it's relatively small. And the thing on New Zealand dollar to American dollar is that as long as we stay above the green area, the sentiment here remains positive. Bitcoin, one of my favorite instruments recently, so the big picture please. What we do have here is a descending triangle. I think that we spotted this triangle since somewhere here. There was a flag, and since there we are saying that eventually the price should break the lower line of the flag, of this triangle. Correction, boom, correction, boom, correction. Even when we broke this line, we said that it's nothing. It's not a buy signal because the price was pushed outside. There was no demand whatsoever, no bullish momentum. And then boom, the waterfall here. That's what we are expecting. So what happened is that we reached the pain threshold for those people who bought here. They were watching the chart closely, and most probably they said, oh no, once we will break $6,000, I'm out of this position, I'm out of this market, and they are out, and the price goes lower. They start panically selling their bitcoins. This is what is happening when you have a panic sell-off. So the price drops like a rock. Most recently, we tried inverse head and shoulder formation. It failed. At the end of the day, that was a pennant, or if you will, it can be a descending triangle. I have no problem with this formation. Come back, test as a resistance, the drop. now 3,300, and our ultimate target for the Bitcoin is the blue area. Why? Because it was a resistance in May last year, in June last year, in July last year after the breakout. It was a support in September last year. So in my opinion, area between slightly below 3,000, so $2,900 for one Bitcoin is the dream come true. We should get there relatively soon. So as you can see from the top, from the $19,000, we are dropping towards $2,900, and maybe that is a healthy price for Bitcoin. I don't know, but maybe the price will eventually stabilize there, or maybe they will try to go even, I don't know, here. How does look like? What's that area? 1,100. Maybe, but the Bitcoin should eventually stabilize. That is a typical bubble. That it is a bubble we are talking since the end of 2017, and we have recordings for that, so it's not that we are saying it right now, but we knew that before, and we were warning our traders about this. Friends, traders, clients, everyone, that it's a bubble and stay away from this. But, well, everybody has own mind. Maybe you did listen, maybe you did not. If you did listen, you're a happy person right now. American dollar to Japanese yen. This is the next instrument I want to show you, because yesterday we had an interesting situation. So the breakout of the lower line of the symmetric triangle here. That breakout was started after this head and shoulder pattern breakout of the neckline, and we said that after the breakout of the neckline we should see a drop, and the drop is happening, okay? But the thing is that below this lower line of the triangle we had a congestion, we had a lot of supports in one place. So mid-term uptrend line, long-term uptrend line, and the price decided to bounce from them. They created hourly candle with a long tail, created kind of a V-shaped reversal, drop reversal, and it looks like this reversal will be continued. So it looks like a legitimate denial of those supports, denial of the lower prices and usage of those supports. That can also be perceived as a false breakout from the symmetric triangle, and we all know where the false breakouts are going. They are going in the opposite direction. So the buy signal here may be quite strong. Next one is American dollar to Swiss franc, where I do have a position. And this position is already on break-even point, so I cannot lose money on this. Actually, I can, because I paid 10 euros in swaps, and I have 15 euros which protect me, so I'll move it to 22 euros, which is, oh no, it's 15 from one trade. Okay, so it's still good, and because I have to trade, so I have to stop loss orders. Yes. So I'm still on break-even point, but in opposite to the American dollar to Japanese yen, this does not look like a V-shaped reversal. Yes, obviously the price went above the support again, support, but this is typical correction. So huge drop, small correction, and then we should see a further downswing. Let's see. Yes, typical, because it's 38.2. 38.2 is always important. So as long as we stay below 38.2, the sellers have bigger chances for success. I will start to get worried when the price will come back above 38.2. I'm not really worried, because I'm already on break-even point, so it's not that I'm not sleeping at night because of this. I don't have any more risk on this trade, but I would love to see a further drop. About the potential target, first one is here, but in general I think we should aim this lower line of this triangle, which makes it a sweet deal, because my original stop loss was on 60 pips and the take profit is on 200. 20, so almost 4 times bigger than the initial loss. So this is the kind of risk to reward ratio that you should aim for. In my opinion, the price should decline. Obviously, I can be a little bit biased because I have a position here, but we will see where it will go. Oil. Head and shoulder formation bouncing from the downtrend line. That's why we said that from the technical point of view, that's a sell signal, and this happened. We said that despite the technical situation, the trading occasion is not there because of those OPEC meetings. It's always risky to enter the trade, even with the best technical setup, when you have an important fundamental event. But in this line, so far so good. We are still waiting for the outcome from the meeting of Russia and Saudi Arabia. This should bring us volatility today on this market. We will see where the price will go. From the technical point of view, we should go lower. But again, the technicals will not be important once the data will hit, well, the outcome of this meeting will be known. Dollar index, false breakout. They try again. They meet a horizontal support and they bounce again. We will see, but well, from my perspective, from the perspective of my trade, I would love to see the breakout of the support and the price aiming the yellow one. We will see how it will go. But after this kind of false breakout, we should see a bigger upswing. So maybe there is a weakness of the dollar. I mean that they cannot use this great chance for an upswing, because this false breakout is a great chance for an upswing, but they don't know how to use it. S&P 500, what we are having here is movement from the horizontal resistance to the horizontal support, and this support worked again. So yes, it's a nice sideways trend. If you're trading sideways trends, you probably had a buy here with a relatively low risk, and then you're on profit. From this point, we should get here and here and here, which should eventually lead us to the breakout. And the breakout will be tradable for me, because I go with the trend, I go with the strong movements. And breakout to the upside, buy signal, breakout to the downside, sell signal. Australian dollar to Japanese yen. I had a position here, but it's already closed. The last horizontal support is defending. I think too many lines here, don't you think? Let's remove them. No reason for them. Let's make the charts clean, neat. And as for now, this pair lost the relevance for me. Thank you very much. I will not waste my time on it. American dollar to Canadian dollar. Broken resistance. This resistance is now being tested as a support. It all depends from the data from today, so stay sharp, because today important data for the Canadian dollar and for the American dollar, so for both of them. Here the volatility will be definitely different than on the other crosses. Euro dollar. Here luckily we can see a bit of a weakness of the dollar, which makes the probability of success on my trade slightly better. What we are having here is a symmetric triangle. We had a false breakout again. Sellers don't use it, so false breakout was used by the sellers. Second, not so much. So second stopped on a short-term support here, and we still have the pressure to the upside. And price breaking the orange area for good will be a nice buy signal. Yes. DAX is in a worse position than S&P 500. So S&P 500 is in a sideways trend. S&P 500 defended important support. DAX did not. DAX fell below support and stays below the support. So the situation on the DAX does not look encouraging. Gold is still pushing higher, so they try to break 38.2 once, twice. Even yesterday again, at the end of the European session. Again, the price went lower, so the resistance here is pretty strong. The thing is that resistance is strong, but sellers are weak though. So they cannot use this false breakout, for example, here in their favor, like on euro dollar. So imagine the situation where we do have weaker stocks and a weaker dollar. That should be a heaven. That should be fuel for the gold. If they will use it, we will see. As long as we stay below the lower black line, the sentiment is still negative, because that's still a flag in a downtrend. And we cannot even break 38.2. Even the price will go like to 50 and it will not mean anything, or to 61.8. So yes, I think that, unfortunately, because I'm a fan of gold, of a physical gold, but the chances for a further upswing are limited. In my opinion, they are limited. Let's look for decent occasions elsewhere. Let's leave the instruments that we have. Other instruments, Australian dollar to Canadian dollar. First, I need to apply my template. So what do we have here? I think I mentioned about this head and shoulder pattern. But look at this movement, upswing, reversed. Now the price is above the horizontal support here. Okay, fair enough. As long as we stay above the support, there is no sell signal. Actually, there can be a buy signal. And the price breaking the orange support will give us a sell signal. So actually, this setup is, I can say it's pretty clean. So double bottom formation, if it will not be used, here is the place to go short. Okay, like this. You can see some movement on the American dollar to Swiss franc. The price is pushing lower, drawing long heads. We will see. So Australian dollar to Canadian dollar, sell signal when the price will break this blue line, orange line, and the buy signal when the price will break this blue line here. Australian dollar to Swiss franc, big picture. So a daily chart, that's a downtrend, that's a sell signal, but the risk to reward ratio after this is bad. So I'm not going to participate in this trade. Australian dollar to Japanese yen, the same. Australian dollar to New Zealand dollar. Ooh, this is beautiful. So I told you that New Zealand dollar to American dollar is the best pair right now. And it is the best pair right now. And on the Australian dollar to the American dollar, what we have this week, look at this. What we have this week is an ultimate long-term sell signal on this pair. After a bit of a sideways trend or a descending triangle or the symmetric triangle, this is descending, drop. Unfortunately, I missed this trade. It was a trading opportunity on 5th, so 2 days ago. I missed it. Maybe we'll have a comeback, but the thing is that this is an ultimate sell signal on the Australian dollar to New Zealand dollar. Let's check the swaps. They will be both negative, yes. So it's not a carry trading strategy, but still good. Next one, Canadian dollar, Swiss franc. Here we are also in a long-term symmetric triangle, or actually ascending triangle. There is this horizontal resistance and there is this dynamic support. Look where we are. We are on this dynamic support, which can be a reason for a bounce, but the breakout here can be lethal and will bring us a strong sell signal. Cut to Japanese yen. That is a sell signal, which comes from this breakout of this line. And this happened this week, also on the 5th. Don't chase the market though. Maybe the opportunity will come after the data from Canada. Let's check Swiss franc to Japanese yen. Well, in theory, what's that? It's a downswing flag and a downswing, but the price is resisting right now, so no opportunity. Euro to Australian dollar. No, there is this support, but no. Euro to Canadian dollar. That line was pretty good. Look at this. High accuracy in respecting this line. So the breakout can be meaningful. Let's mark this as a horizontal support right now. Yes, this looks like a good buying opportunity. On a weekly chart, kind of an uptrend. I wouldn't go there, but yes, it's not so bad. It's not so bad. Also, we broke this resistance, which could be considered as a upper line of the flag formation. So we denied this flag actually. Drop, correction, drop, correction, drop, correction. If that was a correction, we're supposed to see the drop, but the price went higher, so it's okay. Okay, guys, let me recap this relation for you. On Australian dollar to American dollar, sell. British pound to American dollar, nothing. Euro to British pound, waiting for a buy. New Zealand dollar to the American dollar, that's positive. Bitcoin super negative. American dollar, Japanese yen, that's okay. Here, well, negative, but I'm probably unbiased because I have a position. Here, oil negative, but watch out for the meeting today. Dollar index, well, negative. S&P 500 negative. American dollar, Canadian dollar positive. Euro dollar positive. DAX negative. Gold, well, there is a buying pressure, so I would lean towards the bullish side. Australian dollar to Canadian dollar, waiting for a nice movement. Australian dollar, New Zealand dollar, super long-term bearish position. Canadian dollar, Swiss franc, that can be a bounce, but the breakout will give us a sell signal. Canadian dollar, Japanese yen, that is sell, and Euro to Canadian dollar, that is buy. Okay, my friends, thanks very much for attending this daily analytical report. I hope you enjoyed this. And in the meantime, visit our Twitter account and our website, alpari.news. All the best, guys, and see you in half an hour on our next educational webinar, this time about candles and price formations. All the best.